program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.
Hello and welcome to the Global View on this Tuesday. I'm Andrew Gagan. Good to have you with us again here at AusBiz. Let's see what happened overnight. Global stocks rallying to a fresh record, while gold has fallen sharply on US-China trade optimism. Wall Street's main indices extended Friday's record closing highs as investors look to this week's meeting between President Trump and Chinese President Xi, as well as being buoyed by the prospect of a likely rate cut from the Fed. Earnings results also looming large, with 5 of the Mag 7 reporting this week. Well, stocks, specifically Amazon shares, were on the move after reportedly planning to cut as many as 30,000 corporate jobs immediately as the company works to reduce expenses and compensate for overhiring during the peak demand of the pandemic. Qualcomm unveiled 2 AI chips for data centers that will be available next year, diversifying beyond smartphones, sending its shares soaring. And shares of the chip companies rose in anticipation of the meeting between the US and Chinese leaders. Nvidia and Broadcom higher, while US-listed shares of Chinese companies also rallied on the day. Beverage maker Keurig Dr Pepper climbed after lifting its annual sales forecast and raising about $7 billion to finance its purchase of Dutch coffee giant JDE Peet's. Lululemon shares rose after the company announced a partnership with the National Football League to launch an apparel collection. And Janus Henderson shares rallied after it confirmed an acquisition proposal from Trion and General Catalyst. And shares of the gold miners fell heavily on the pullback in the bullion price. Locally, the Reserve Bank Governor Michelle Bullock has said that its policy setting board will need to factor in developments in the labour market and inflation when it meets next week. Addressing economists last night, she said, "We'll do our best guess at what we think we know. On that basis, we can make some decisions about whether or not there's some more interest rate cuts in that to address perhaps the employment market, or whether we're a little bit more worried about the inflation rate." Meanwhile, President Trump has announced a series of deals on trade and critical minerals with 4 Southeast Asian nations during his Asian tour. This comes ahead of his meeting with Chinese President Xi in South Korea on Thursday, where tariffs and Chinese rare earth export controls will be discussed. And Argentina's bonds, stocks and currency have surged after President Javier Milei's party won an overwhelming victory in the midterm election, with voters strongly backing his free market reforms and austerity measures. Well, ahead of this week's Federal Reserve meeting, the 2-year Treasury yield is around 3.5%, the 10-year down to 4%, and Australian 3-year government bond yields rose to 3.46%, with markets pricing in the 35% chance the cash rate will be cut by 25 basis points at next week's meeting, with 2 more cuts in this easing cycle. The US dollar index is down slightly on the day, the Aussie having climbed to 65.5 US cents. Oil prices are slightly lower, with traders more focused on OPEC's plans to increase oil output than hopes of a trade deal between the US and China. Brent crude futures down 0.5% at $65 a barrel. Copper was up almost 1%, iron ore around 1.5% higher at $106 US a tonne, and gold has fallen below $4,000 US on signs of a thaw in the US-China trade tension. Spot gold down 3%, currently at around $3,980 an ounce. And Bitcoin has risen to over $114,000 US. Let's get more on global markets with a focus on what we've seen on Wall Street. Steve Sosnick joining us from Interactive Brokers. Steve, welcome back. Good to catch up with you. Let's begin with, it is a huge week, isn't it? Certainly a number of central banks making their policy decisions, including the Fed. Then, of course, we had that meeting with Xi and Trump, and we've got earnings results to boot with 5 of the Mag 7. What are you watching at the moment?
Good morning, Andrew. All of it. This is a week that's got so much going on, so many potential cross currents. But I think what's interesting is the basically traders' mood is what's really driving the news, the reaction to news as much as anything else. Obviously there was some positive rumblings out of the U.S. Asian trade talks. I mean, the president, certainly likes to, lead with a win, and it certainly seems that he's trying to accomplish that on his trip to Asia, and his meetings with various Asian leaders, including Premier Xi of China, but also just. At the same time, there was the markets rallied on the enthusiasm about trade talks, but we also, so China's our third largest trade partner. At the same time, he threw an extra 10% tariff on our second largest trade partner, Canada, because he didn't like a series of advertisements that the province of Ontario is running about with quotes from President Reagan dismissive of tariffs. And because tonight is the World Series, the baseball championships, and one of the teams is from Toronto, it was driving him crazy that over the weekend there were these ads from Ontario for a Canadian team that seemed to trash his leadership, and so but the market didn't register that because it was quite frankly inconvenient.
Yeah, well, yes. Well, we know how capricious that the president can be. So, Steve. Let's just turn to what we're seeing on the earnings front. As I mentioned, 5 of the Mag 7 reporting. And you look at what's going on in the market at the moment, that momentum, the MoMo trade is continuing at a pace with more records on Wall Street. So is this some sort of risk event likely this week if we see any misses? And what are the expectations?
Well, I mean, I think the expectations are for everything to sort of go as planned, because you could see that in the relatively low levels of VIX. And one of the indices that I like to watch when there's near-term news events is an index called VIX 9D, which to spare too much mathematics, the VIX uses a 30-day average length to expiration for its calculation. The 9D uses 9-day average expiration time to expiration. So, it's really a 2-week look ahead. And certainly we have plenty to do over the next 2 weeks, but the market is basically saying, full steam ahead, that the Fed is going to cut rates. Everybody expects that. It's likely that Chairman Powell is going to announce an end to quantitative tightening, which is in there. Obviously, no one is too concerned about the big earnings that are coming, even though it's about 40% of the S&P 500. But again, as I look at the individual options on those names, they're not showing any particular amounts of fear either. They're just sort of expecting a regular type of move on earnings. So again, the mood is sanguine, and I guess if I had to look at something negative, it's that the market is really not poised for any bad news to come in right now, whether that's from Powell at his press conference, whether that's from any of the various big stocks that are releasing earnings this week.
Meanwhile, the government shutdown continues. Steve, this is the potentially prospect here. It's going to be the longest on record. What is the effect at the moment, or has this largely been ignored by markets, do you think?
Here's the problem. One of the things that we talk about here a lot is the K-shaped recovery. And if you think about who's doing well, those with upper incomes are doing well. That's the high end of the K, and those with lower incomes are not, and particularly anybody who relies on government payments, which are due the beginning of the month in terms of food assistance and things of that nature. They're very nervous, but investors tend to be in the top part of the K, and so it doesn't feel much. My flippant answer to people when they asked what would happen with the government shutdown, I said, tell me how this affects, tell me how it would affect Apple or Microsoft or Nvidia, and I'll tell you how the market will react. And the answer, of course, is not really. Over the month of October, which is the month of the shutdown, the S&P is up about 2.7%, and VIX is down about 3%. So it's kind of a yawn. We're starting to see things break a little bit. One of the reasons for the shutdown is that payments for the government-sponsored insurance plans are likely to really zoom higher. I don't even want to get into the uniqueness, shall I say, of the U.S. health insurance system, but that's really what the Democrats are fighting about. But as of now, the only thing that's really affecting the people at the upper end of the K are scattered outages at airports, which, to be blunt, I'm nervous about that because I'm flying this weekend. So, but beyond that, I got to say, someone like me isn't really affected, and that's why you're just seeing the market shrug this off, because those who invest don't have a lot of direct impact put on them from the shutdown.
Well, in fact, you're giving it away, Steve. You are flying our way. We look forward to catching up with you in person. Until then, enjoy the rest of your week. Thanks for joining us from Interactive Brokers.
My pleasure, and I can't wait to see you in studio in a couple of weeks. Take care.
Steve Sosnick from Interactive Brokers. Let's check the local market. We're likely to start significantly lower there. SPI futures off by more than 0.4%. At odds with what we saw on global markets overnight, we have seen those commodity prices, in particular gold, come off overnight. So that is seen as a potential drag when we get going in just a minute or two. Stay with us for that.
This program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.